I think I had two that I was told that were these no-brainer trade line exceptions, meaning jumbo banks want you to, for the most part, have three trade lines, trade line being a credit card, auto loan, student debt, anything like that. I had two clients, both of which just barely miss it, but they have perfect credit, tons of depth, but like one is short of the requirement by 3 months, but has $5 million in the bank, very low debt to income ratio. Was told it's a no-brainer exception declined. Had another one very similar.
With $5 million in the bank.
Yes.
Wow.
So this morning I have these two in a row where they both said these are simple, totally fine, and then they didn't make the approval. So jumbo lenders basically want you to, it's weird, they want you to have a history of debt to give you debt, and you would think the less debt I have, the better.
Mm-hmm.
So making the exceptions, which would have been very simple a couple months ago or even a month ago, I just haven't requested one personally. And I was just thinking about why would they all of a sudden be so much tighter? And I think the deeper we go with unemployment, with stimulus plans, with not getting back to normal and letting people have regular income, it's more risk, because all these big banks are carrying forbearance and they're carrying people's mortgages. People don't have to pay them. And they're just, it's put it on my tab. And these tabs are getting pretty big at this point. So I think that's why they're starting to really manage their risk, just looking at what the future looks like.
Interesting.
On the other side of that, from an interest rate perspective, last week was a bad week for interest rates. We saw, I did a detailed video on this, but we basically saw rates go up about 0.25% last week. And then yesterday we had good recovery. And this morning, the market looked like it was going to open for the better. And then we had, I think Biden, I didn't see it, but I think Biden did his stimulus plan announcement. That must have been what impacted, because all of a sudden things changed. And
I just got the thing, $1.9 trillion package.
Yeah, so more debt, more free money that we're printing. And don't get me wrong, not that people don't need it. It's just the overall picture of, is it the best solution? And it just keeps putting, the companies are left to carry the weight in more and more debt, right? So it's just interesting. Just a very quick shift. It kind of happened overnight, or maybe I'm just kind of, I had to drive to Sacramento this morning and back, so maybe I had plenty of time to think about it. That's really the two biggest things I would say is if you're in our market and you're looking at jumbo loans, you got to make sure your credit is deep enough to make the jumbo banks happy right now, because they're, at least in my experience, they're not making the exceptions that they were a month ago. And then keep a close eye on interest rates, because I do think we're going to start to see those move upward, not dramatically, but we will start to see them shift upward, because inflation is going to be a big part of that. Inflation's going up. We're going to see rates go up.
Inflation. It's funny. It's like somebody's listening. I just got an alert from the Wall Street Journal about a $1.9 trillion.
He just announced. I got the New York Times alert.
But inflation really is the factor on all of this spending. So that does become.
I have a question. I have two questions. Was the bump last week in response to the political events, or was it like a bunch of different things, you think?
I guess was it this week? I'm back to that. I don't know what day it is. So I guess it would have been last week, and then Monday and Tuesday of this week. And then we flattened out, something like that. So I think it was fear. So fear drives the markets, right? So if people are scared, if there's fear in the market, stock market typically does worse because of that fear, and mortgage rates get better due to fear. The fear is kind of going away. We're not as afraid of COVID as we were, because the vaccine is making its way around. We know who our president is. The presidential drama seems to be over at this point. And then I think the inflation concerns are a big part of why we saw the movement, because if we, print a bunch of money and keep going this route, rates have to go up. If
unemployment is rising, it's just it's a lot of debt for future generations to deal with. And when we talk about jumbo, we're talking about above jumbo conforming, right? So
over
so anybody
822.
borrowing 900K or more.
Yeah, on a 1 unit. So if it's a 2 unit, you can go higher. Here's your opportunity to stump me on my loan limits. But yeah, but this is just going, I guess, back to the credit trade line subject. If you're borrowing at 822 or less, they don't care how many trade lines you have. You could have one credit card and have an 800 score and you're fine. If you go over that 822 number on a single family, a condo, a townhouse in our local area, you go over that 822, they want you to have, for the most part, 3 trade lines, 2 of which have a 2-year history, and they want them to be active in the last 12 months. So the one that had the $5 million, he has 2 B of A credit cards that went back to like 0405. Perfect credit history, 0 balances, managed perfectly. One of them was used most recently in August of last year. So he just missed their 12. They basically want him to go use that card. So my question was, do I have him go use that card, get a tank of gas today, pay it off tomorrow, and then get a credit supplement? Is that really what I have to do? And the answer is yes. So it just doesn't make any sense, but it's I guess the only logic I can apply is the jumbo lenders thinking, hey, you're borrowing 7 figures from us. We want to make sure you can manage the payment. They just want to see a history of managing multiple payments since you're now going to have another one. That's the only logical explanation I can put on it.
Wow. So what about Haley on inventory and the marketplace? What does that look like?
Yeah, we have a slight increase in single family homes coming on, which is no surprise, and it's welcome, but still not where we were
Needed.
The last couple of months. Yeah. 50 new single family homes in the last week came on. And a lot of those, I just want to look at the price points really quick. Yeah, out of 50, 10 of them are under $1 million. And, a couple of those 6 of those are at $1 million.
$999 or $995.
Yeah. And 118 new condos, TICs, and lofts. So we're getting back up into the same kind of numbers we were looking at for the fall. And for 2 to 4 units, same thing. 17 new buildings came on. And then in terms of what went into contract, single family homes. 32 homes went into contract or went pending. 61 condos, TICs, and lofts, and 11 multi-unit. And then
so the multi-units above 50% on what's going into contract as far as what's showing up. Those are, and it's at 50 on the condos and 75. So the absorption rate's really quick on single families.
Yeah. Oh yeah. And then 30 single families closed in the last week. 55 condos, TICs, and lofts, and 12 multi-unit. So multi-units, it's like 1 in, 1 out too as well.
Yeah. It's getting, well, I think there's value starting to show up in the multi-unit. So
tenants moving out, landlords wanting to get out of the thing. So I don't know. We'll see. Hopefully it goes up and up and up. For
as far as our numbers.
Yeah. We need those single families.
Yeah, single families are where it's at. And then that, although it does, I think the interesting thing as far as the market that seems to be filling the void that kind of came into existence towards the end of last year for condos is the renter, who the pricing of the condo and the interest rates has gotten to the point now where they're like, why am I doing this? So it's bringing buyers that weren't originally in the market or wouldn't have been in the market a year ago. It's bringing them into the market, and that's kind of how when you get these kind of changes and shifts, that's kind of what happens. It's almost like a big barrel of kind of liquid, and as the barrel moves into a different position, the liquid's still there. It just moves to a different part of the barrel. So
yeah, well, and I mean, this is kind of like what we've been saying all along for during COVID, but it's a lot of the consultations that we've had. I feel like a lot of the conversations that we're having with people who bought homes within the last couple of years are already needing to upsize and get into something bigger because they can't work from home altogether still at this point. It's just too much. Or they need that outdoor space that we've all been talking about. So we've been having a lot of those conversations of doing the math of like renting their current place and how do they make the shift, and should they rent it, should they sell it, a lot of those conversations. So
we're having a lot of those conversations.
Yeah.
And then interestingly enough, the lending regulations that you're talking about, Sean, kind of favor the move up buyer more than they really do the first time home buyer. And the first home buyer is going to have to jump through one or two more hoops to make the process come together. Whereas that move up buyer, it's the kind of, they're going to look really, they're looking good to the way the lenders are setting up criteria at the moment.
Yeah, and that's a good point. So they do have some of the lenders who have that trade line requirement. They say you can have less if you have a mortgage history, right? So you're absolutely right. And I think that's a good point, because one thing I've been thinking about a lot lately is I was a little late to this because I had somebody call who wanted to make an offer within an hour and a half. He wanted a pre-approval letter at 12:30 to see a property at 1 to make an offer at 2 on a $1.25 million house. Well, to us, it's just like a normal price point. But nationally, it's absurd that first-time buyers are spending 7 figures and that just, so you have to think of who these banks are. They're not built around Bay Area. These are Chase, Wells, B of A, all these big name banks, these national brands and banks that $1 million for a first-time buyer is not normal outside of most of, the big markets in California, our area, LA County, Orange County. I mean, outside of that, you're not buying $1 million home for your first house.
Yeah.
You're buying.
So you're right. That's a really good point.
It's based on what we're kind of seeing as far as people prepping and stuff. There is quite a nice supply of inventory coming down the pike. So what we're looking for is coming. What we're doing with sellers at the moment is trying to get them up and out on the market now, where before all of the other competition shows up, because now is a great time to be out there, because there's just everybody else is slower and taking their time. And
well, and just for reference, we don't usually talk about this number, but the amount of single family homes that are just active right now that have been on, since whenever, that are just active, that are on the market right now, there are 195 in San Francisco for single families, and for condos, TICs, lofts, 634. So quite a big diff. We don't usually look on the grand scale, but that does mean that that is telling us if there are 50 new single family homes this week and there are 195 out there, like there are some that are overpriced, that are some that are funky, that have opportunities. So we like to see that stuff, because then
that's where the deals are. That's where the deals are. Perfect. So Sean, how do we find you when we're looking for you? And we have another question.
You can look up Sean Herrero on Google or at Adventure Lender on Instagram. That's I'm everywhere.
You're everywhere. You're in front of that picture, but I'm sure you'd like to be in that picture behind you.
I would like to be in that picture. It would be a much better place to be right now. Mavericks has been going off all winter, by the way. Half Moon Bay has had a beautiful, beautiful season. So I would love to be out in Half Moon Bay right now.
Well, it's a holiday weekend. Maybe if you turn your phone off.
Yeah, exactly.
What? Who's taking holidays?
What's a holiday?
And where is anybody going? Where?
Like you go to the living room, like yay, away from the computer.
as long as you haven't been visiting Washington recently and renting an Airbnb, you should be able to rent an Airbnb somewhere else in the
Yeah.
country.
Yeah, that was a big move.
What happened to Washington?
Well, no, DC Airbnb pulled
Oh,
all their
DC.
listings.
Oh, yeah. DC. Yeah.
Yeah, Washington DC.
Not the place to be.
Yeah.
Yeah.
Well,
Where do we find in the dark looking for light? Where does a home seller or a home buyer find us, Haley?
they find us at elevationrealestate.com, and they can find us on YouTube and at Elevation SF on Instagram.
Awesome.
Yay.
Yeah, well, it's definitely a busy, interesting kickoff to the year. Do you want to give a prediction before we go on? What do you think? Everybody wants to know what's going to happen to rates this year. What's your 2 cents on that?
I think they're going up. There's nowhere else for them to go. We've been sitting at I think we're going to be above 2%. I think we'll maybe mid threes. That's going to be my prediction. Mid threes, which is still insane.
Yeah,
It's
if you said that a
insanely
year
low.
ago, I'd be like, wow.
Yeah, a year ago. So this time last year, we were sitting at probably 3.875. So I do think we'll be like around 3.5. We've been sitting at this 2.99-ish level and slightly lower for what, 4 months, maybe 6 months now. It can't stay here forever. It just can't.
Yeah.
Lock them in now. Lock them in now.
That's all. Well, thank you guys.
Thanks.
Have a wonderful holiday weekend, and enjoy. And we'll see you next week.
See you next week.
Right on. Thanks, you guys. See you next week.
Cheers. See you next
Bye.
week.
Bye.
Bye.